Hi and welcome to today's video and today's presentation. I want to talk about the end of the petrodollar. Maybe you have seen it on TV already, or you found some other videos about the dollar and actually the dollar ending to be the petrodollar. There was a contract made 50 years ago on the 9th of June where the Americans and the Saudis agreed that the Saudis, or also then later on the OPEC countries, can just sell oil in US dollars. And I want to have a deeper look on the impact that this could have, the depegging of the US dollar from oil. As you will see in my presentation, it is quite impactful what could happen now, because this helped the US dollar also to be the world reserve currencies and did give other advantages to the US as well. So let's get started. Let's have a short look at the table of content. Here we start with the introduction. We will look at the definition of the petrodollar. So I will explain why is it actually called the petrodollar and also the importance in global finance. In the second part, which is the history of the petrodollar, we will look at the origin and at the establishment. Then we look at key arrangements and treaties. You will see that the US president actually went there and made a deal with the Sheikh of Saudi Arabia back then. In part number 3, we talk about the economic and political impact, influence on global trade, and relationship with oil price and the US dollar. Then we have a look at the challenges and criticism, economic dependencies, political and environmental concerns. Then we have also number 5 and number 6 here, the current status of the petrodollar we will discuss, and the recent developments and shifts as I already mentioned in the intro, emerging trends and alternatives. We will talk about mBridge here, which is a new digital CBDC basically from the Bank of International Settlement. And then we will have a look at the conclusion and the summary. So let's get started. Are you ready? So the introduction. We will first look at the definition of the petrodollar. And I have told you a little about it already. But let's just read it so we will really understand why it's called petrodollar and what has been the historical announcements and the historical happenings to make this petrodollar so strong and the world reserve currency. Petrodollar refers to the revenue that oil exporting countries receive in US dollar. Importance. The petrodollar system ties the US dollar to the global oil sales. And now there's something very important, this is why it's highlighted, ensuring its dominant position as the world's primary reserve currency. So we can already see that this decoupling from oil, the dollar decoupling from the oil some days ago could have actually more impact than we think, because it will clearly weaken the world reserve currency that is still the US dollar. Then we have here importance in global finance. Why is or was the petrodollar till now important for global finance? And here we have some points. Stabilizes global oil markets. The petrodollar system ensures that oil prices are standardized globally by being priced in US dollars. So everywhere in the world, the OPEC countries and all oil producing countries actually have been pricing their oil in US dollars, as you know. There have been some countries like Iraq and other countries that tried to decouple it much earlier. And of course, there was also some countries already before this decoupling from the dollar to the oil price that traded oil in their local currencies before. But as you will see later on in the presentation, the problem is always if you're getting the other country's currency, what are you going to do with it, right? It's very hard to invest in markets. So it's very hard to invest in some assets if you are not getting US dollars. And most of the stock markets in the world, you cannot or should not put too much money in, right? But let's have a look at this later. Furthermore here, this standardization provides stability and predictability in the oil markets, facilitating smooth international trade. If you have one stable currency like the dollar, till now world reserve currency, it's much easier to trade in it because then you don't have this internal inflation or hyperinflational problems. If you especially take Venezuela, if you would have bought oil from Venezuela and you would have done this in local currency, that would have been a big problem, right? The next point is supports US dollar dominance. By pricing oil in US dollars, the petrodollar system maintains the dollar status as the world's primary reserve currency. We talked about this already, so it makes this currency, it makes the dollar, used to make the dollar very, very strong, because this basically forced everybody to have US dollars. And every country in the world, if they don't produce oil themselves, needs to have oil because of the energy. You need energy to produce goods and services. So it's very important that you have energy. Countries around the world hold large reserves of US dollars to purchase oil, supporting the currency's demand and value. What this means is also that the demand for the US dollar will now decrease and decrease even more. Because if you do not have to hold US dollars anymore, and you will see in a different video, and we will talk about it in this presentation just a little bit, that a lot of countries are moving now into the BRICS, and the BRICS GDP is already bigger than all the other countries. Facilitates international trade. The petrodollar system simplifies international trade by reducing exchange rates risk and transaction costs for countries trading in oil. So as we discussed already, you are not that liable, you're not that dependent on internal inflation rates, hyperinflation, and you don't have the exchange rates. This can also be an advantage. It also supports global liquidity, making it easier for countries to ensure in large-scale economic activities. This is also an important point. So global liquidity, for example, if you are an oil-selling country, then it's very easy for you actually to put the US dollars back into the US stock market or in any assets or commodities. Otherwise, you would have to go through and exchange it and lose money in the exchange. So for the US dollar, you have a lot of markets, a lot of liquid markets that you can use. Yeah, we talked about this already. So investment in financial markets, revenues from oil sales are often reinvested in US financial markets, including stocks, bonds, and real estate. This can also be a bigger problem for the US, as I see, because this has now a rat tail. If countries are not selling the oil in dollars anymore, they're also much more unlikely to invest in a local stock market in the US markets. Till now, the US markets are almost, it's not the only markets that you can invest, but it is the most interesting markets. But with crypto coming into the equation, then actually you can also invest in crypto, and it's much easier. This reinvestment supports the US economy and contributes to the stability and growth of global financial markets. Then we have economic and political alliances. The petrodollar system reinforces alliances between the US and oil exporting countries, particularly the Middle East. But now we will see how this continues, because Saudi Arabia is not the only country that is selling oil, not just in the US dollar. These alliances often translate into geopolitical support and cooperating on various international issues. When countries do a lot of trade with each other, this normally benefits both of the countries. Like discussed, the Saudis, for example, sell a lot of oil. They have also a big investment fund, are investing in the stock markets and so on. So they also put a lot of money into the real estate market and into Silicon Valley, for example. Global finance stability by providing a consistent and widely accepted medium for transactions. The petrodollar system contributes to overall global financial stability. This stability is vital for the function of international economic systems and for avoiding crises related to currency fluctuations, oil price shocks. Then we have discussed this now in very detail, why the petrodollar is important and what may change. But also very important or very interesting is actually the history of the petrodollar. If you look at the history, we will first want to look at the original and establishment of the petrodollar. And this goes back to World War II or post-World War II. So if we have a look at the presentation, post-World War II economic landscape. After World War II, the United States emerged as a dominant economic power, with the dollar being the backbone of the international monetary system. Then we have one of the more famous happenings, which is the Bretton Woods Agreement in 1944, established the US dollar as the world's reserve currency, pegged to gold, with other currencies pegged to the dollar. So what happened is they agreed back then that the dollar should be backed by gold. And you will find these old dollar notes where you actually have the amounts, and it would be like a certificate where you can go to the bank and you would get the gold, like it was intended before the banks, when the goldsmith used to keep or store your gold for you in a little town. He would hand you out a confirmation or a coupon, basically, that confirms that you gave him the gold, and he locked the gold in his safe. And then actually he would hand it back to you. But already back then, the goldsmith was giving out more certificates than he did have gold, so not much changed. But in this case, they tried to peg the currency, the US dollar, to gold, and almost all the other currencies that have been more or bigger or around at this time have been pegged to the dollar. So everything was pegged to something. Then we had the collapse of the Bretton Woods system, 1971. In 1971, President Richard Nixon ended the gold standard, making the US dollar a fiat currency. If you remember, there was mainly the French finding out basically that something fishy is going on, and they don't believe that the Americans have all the gold they're claiming to have. And this was one of the reasons why they actually decided that this is actually true, and they took it off the gold standard because they didn't have the gold to back it. This move led to fluctuation exchange rates and economic instability, promoting the need for a new system to stabilize the dollar. So you saw, after taking away the dollar from gold, they had problems to stabilize it. So they have been looking for a different solution to stabilize it. And what happened? US-Saudi Agreement 1974. In 1974, President Richard Nixon and Secretary of State Henry Kissinger brokered the deal with Saudi King Faisal. So they have been traveling to Saudi Arabia. The deal happened on a warship, actually, where nobody really knows what they have been talking about. But the outcome was basically the pegging of oil to the dollar. Details: Saudi Arabia agreed to price its oil exclusively in US dollars. In return, the US provided military protection and economic support. Impact. This agreement cemented the US dollar's role in global oil trades, leading other OPEC nations to follow and adopt the dollar for oil transactions. The strategic outcomes of this deal. Economic leverage. The US gained significant economic leverage over oil exporting nations and a stable demand for its currency. Military and economic alliances. Strengthened military and economic alliances between the US and the key oil-producing nations, particularly the Middle East. Global financial stability. The petrodollar system contributed to global financial stability by standardizing oil prices in US dollars, reducing exchange rates, volatility, and facilitating international trade. Specifically, now we will look at the influence on global trade. Standardizing prices. So we heard already that everything was from now on priced in US dollars. Trade balance. Countries must maintain significant reserves of US dollars to purchase oil, impacting global trade balances, reserve management strategies. This is the best thing that could have happened to the US. Like we discussed, if you have US dollars, you are also very likely to invest back into the country, or you don't even get the dollars, but you're getting some kind of balance that you can spend in this country. Demand for US dollars, of course, this increased significantly the demand for US dollars. A lot of bilateral trade agreements. Many countries entered into bilateral trade agreements with the US to ensure a steady supply of dollars, further embedding the dollar domination in global trade. Investment and capital flow. Also a very important point is not just the normal stock markets or the commodities or real estate or whatever. Also a very important point is the treasury and the bonds that a lot of these countries have been additionally, so to say, backing the US and buying the debt. This is an important point, and now we will see nobody wants to actually hold the debt of the US anymore because the situation doesn't look that good. And with the disappearance of the petrodollar, so to say, a lot less dollars will flow into the US. A lot of countries will minimize reserves. Of course, they don't have to hold a lot of reserves anymore because they don't have to pay for the oil in dollars. Infrastructure and development. The flow of petrodollar into developing economies through investments and aid fosters global economic growth and infrastructure development. The US also tried to support these countries, keep them happy, have a good oil price. Now we talk about the relationship with oil prices and the inverse relationship, oil prices and dollar value. There's typically an inverse relationship between oil prices and the value of the US dollar. When oil prices rise, it often leads to a weaker dollar as much dollars are needed to purchase oil. This is also very interesting to know. Conversely, when the dollar strengthens, oil prices tend to fall as it becomes more expensive for non-dollar economies to buy oil. Also very interesting is that the relationship between oil and the US dollar till now, the Fed could use as inflation control. The petrodollar system helps the US manage inflation. High demand for dollars keeps its value stable, mitigating inflationary pressure even when oil prices fluctuate. Economic policies. Monetary policy. The Federal Reserve's monetary policy, including interest rate adjustments, significantly influences oil prices. For instance, low interest rates can lead to a weak dollar, causing oil prices to rise and vice versa. Fiscal policy. US fiscal policy, such as government spending and taxation, impact the supply of dollars in the global market. which in turn affects oil prices. Increased government spending typically weakens the dollar, leading to higher oil prices. This is exactly what we already see in the moment if you watch what's going on. Geopolitical stability. US influence. The US can exert significant geopolitical influence to the petrodollar system. By controlling access to dollars, the US can impose economic sanctions and influence international policies, like we have seen in the case of Russia confiscating all their assets. Loads of their assets, or majority of the assets that have been confiscated, have been treasuries. So they have been buying bonds and other assets like real estate and investments of Russians in the States. Economic or political instability in these regions can lead to oil prices volatility affecting the global economy. We saw that in the war of Iraq, and we see that in the moment in the Black Sea region and so on, that ships can actually not take their normal routes. They have to go around Africa. This impacts everything. This impacts the price of oil. This impacts the price of all goods and services because transportation cost is getting higher and so on. Then we have market speculation, hedge against inflation. Investors often turn to oil as hedge against dollar inflation. When the dollar weakens, oil investments become more attractive, driving up prices. Dependence on US dollar. Countries reliant on oil exports often peg their economic stability to the US dollar. Fluctuations in US dollar's value can lead to significant economic instabilities in these countries. Reserve accumulation. To facilitate oil trade, nations must accumulate large reserves of US dollars, which can limit their ability to invest in other critical areas of economics. Trade imbalances. Oil exporting countries often reinvest their surplus dollars into assets. While this supports the US economy, it can create trade imbalances, making other economic overly depending on the health of the US markets. So this is now leading to a situation where all this oil producing country, or everybody that is actually using the US petrodollar system, is getting into a kind of dependency. If the US dollar is actually weakening, a lot of the assets they bought, a lot of the investments they made are also now out of balance. Foreign debt. Countries without sustainable oil reserves may incur significant foreign debt to maintain necessary dollar reserve, leading to potential debt crisis. Inflation and currency issues. The influx of petrodollars can lead to inflation in oil exporting countries if not managed properly. This can erode purchasing power and economic stability. Currency pegging. Some countries peg their currencies to the US dollar to stabilize their economies. But this can lead to issues if the dollar value fluctuates significantly, impacting their monetary policy and economic health. This is again another issue that you have if you are dependent from the US dollar and if you have pegged your currency to the US dollar, because then of course you also have all the positive and also the negative impacts. If the US dollar inflates, if you have a problem with the US dollar, if something happens, you are impacted. Your global currency, your local currency can be impacted because it's pegged to a global currency, and your assets can be impacted like discussed. Then I also want to talk about the political and environmental concerns. Geopolitical tensions, US inflation and sanctions. The petrodollar system gives the US considerable geopolitical power, enabling it to impose economic sanctions on oil exporting countries. This can lead to tensions and conflicts as seen in countries like Iran, and Venezuela and Russia at the moment. Oil as a political tool. Countries can use oil supplies as a political tool, influencing global politics and economy. For example, OPEC's oil embargo in 1970s showcased how oil can be used to export political pressure. Like discussed, oil is very important to produce. Every economy needs energy. And if you are short on oil or gas or anything else, or if the price is rising, you are not able to run a surplus. You're not able to produce or ship your goods for profit. Let's now look at the current status of the petrodollar. Recent developments and shifts. Geopolitical changes. US-China relations. Increasing tensions between the US and China have prompted China to explore alternatives to the US dollar for oil transactions, including pricing some oil in yuan. So Russia and China is trading oil in yuan. Middle East alliances. Countries like Saudi Arabia and the UAE are strengthening economic ties with non-Western powers such as China and Russia, potentially impacting the dominance of the petrodollar. Economic sanctions and diversification. Sanctions on Russia, US sanctions on Russia, have led the country to seek alternatives to the US dollar for its oil exports, exploring transactions in euros and the currencies. Diversification efforts. Oil exporting countries are increasingly investing in economic diversification to reduce dependencies on oil revenues on the US dollar, as seen in Saudi Arabia Vision 2030, and probably one of the most interesting factors that I will do another video in about a week. It's the technological advantages, digital currencies. The rise of digital currencies and blockchain technologies provide new avenues for international transactions, potentially challenging the petrodollar system. Central banks are exploring central bank digital currencies, CBDCs, as secure and effective alternative for cross-border payments. And there is especially Ambridge, a project that will be used by Saudi Arabia and most of the BRICS countries, as I know. Emerging trends and alternatives, shift to multi-currency pricing, euro and yuan. There is a growing trend towards pricing oil and currencies other than the US dollars. The euro and Chinese yuan are becoming more prominent in global trade, with some countries negotiating oil deals in these currencies to reduce dollar dependencies. Currency baskets. Some countries are considering using baskets of currencies for oil pricing to mitigate risk associated with reliance on single currencies. And this will be the BRICS countries. Renewable energy investments, global transitions. The global shift towards renewable energy sources is gradually reducing the domination of oil in the energy sectors. As countries invest more in renewable energy, the influence of the petrodollar may diminish. And you see already it is diminishing. Green bonds. Investment in green bonds and sustainable projects are increasing, reflecting a shift of focus from fossil fuels to renewable energy, which could impact the future of the petrodollar. Regional trade agreements. BRICS and ASEAN. Economic blocs like BRICS, Brazil, Russia, India, China, South Africa, and ASEAN, Association of Southeast Asian Nations, are exploring ways to facilitate trade using regional currencies, reducing their dependence on the US dollar. Bilateral agreements. Countries are increasingly entering into bilateral trade agreements that uses local currencies, bypassing the US dollar and enhancing economic cooperations. Petro-yuan, Chinese strategy. China is actively promoting the yuan for oil transactions and the adoption of other currencies, as we heard already, some countries trading in their own currencies or in the yuan. So the conclusion, summary of the key points, the petrodollar definition and importance. The petrodollar system involves oil exporting countries pricing and trading oil in US dollars. Petrodollar definition and importance. The petrodollar system involves oil exporting countries pricing and trading oil in US dollars, establishing the dollar as the primary global reserve currency. History as reminder. Originated from the US-Saudi Agreement 1974 with Saudi Arabia agreement to price its oil in dollars in exchange for US military protection and economic support. Economic and political impacts. Standardized global oil pricing and maintaining high demand for the US dollar significantly influenced global trade, economic policies and geopolitical dynamics. Challenges and criticism. Created economic dependencies, trade imbalances and political leverage issues, along with environmental concerns to the reliance on fossil fuels. Current status. Recent geopolitical shifts, diversifications, efforts and global technology advances like digital currencies challenging the petrodollar system. Emerging trends include multi-currency pricing and increasing investments in renewable energy. Future outlook for the petrodollar. Of course, we know that the Saudis ended the contract and most of the other countries are not bounded to the dollar anymore, but the potential decline as global energy markets diversify and digital currencies gain traction. The domination of the petrodollar may decrease. Multi-currency system, increasing adoption of other currencies like the euro and the yuan for oil transactions could lead to a more balanced global finance system. Renewable energy transition. The shift towards renewable energy sources may reduce the global dependence on oil. As we have seen in this presentation, the petrodollar was or is still a very important tool for the US to sustain their world reserve currency status. The US has got a lot of advantages through the US dollar, through the printing of the US dollar and basically exporting their inflation and having the oil producing countries, the oil sending countries reinvesting in their country, in the stock market, in the bonds, in their real estate. So it's a really good tool for the US and we will see what's going to happen in the next years. I hope this video was helpful to you. Leave a thumbs up, subscribe to the channel if you're not subscribed already, and I see you in the next video. The next video will probably be about Ambridge, which is the new digital currency, the new CBDC that the BRICS countries will adopt. I see you. Take care. Bye-bye.